So just when you thought you knew what was happening, just when artificial intelligence was telling us to expect gold price in the $2,100 to $2,400 range, today happens. And we're back in business. So we're seeing a pretty significant fall in the price of gold today. And I'm not talking about $30. I'm talking more about the significance of getting below that $2,000 number. Now, we've talked about this price rally, how it launched on hopes of rate cuts and how traders might even get bored, maybe distracted, waiting for those cuts to actually happen. Well, that's what we're seeing today. Those inflation numbers haven't fallen yet. We've actually got data saying the opposite. So the narrative of keeping rates higher for longer has a little bit more weight in a situation like that. So here we are with gold down 1.5%, but far more importantly, trading below $2,000. Before we get back to it, if you're looking for precious metals, hit up SD Bullion. New customers even get gold and silver for spot. That's sdbullion.com/new. So traders aren't the only ones bored waiting for these rate cuts. I'm right there with them. I don't get real excited watching daily price movement, but one of the comments that has been coming up a fair amount is that $2,000 is the new floor. Now, I'm not here to point out that somebody's wrong, but it's a mildly dangerous hope that we're never going to see gold below some certain point again. We don't even need to try to disprove the idea at this point because what we're looking at right now is gold price in the 1900s. Now, this is still just intraday price we're talking about, but it didn't take much to get here. Just a little bit of hope placed a little bit too soon. So what's causing the fall? Well, CPI rose 0.3% in January, and that's more than expected. So the new inflation data brings doubts that the Fed will be able to cut rates several times this year. And that was the hope that really launched this rally in the first place. So you call that into question, you call gold price into question, and that's what we're seeing. Apparently, there was no magic floor keeping gold price above $2,000 an ounce. So now what? Well, just like we saw comments about a psychological floor at $2,000, we see a psychological shift when price goes below it. So we could see further drops based on that momentum. Now, I don't know that overall confidence has changed, but in the short term, well, the bears are at the wheel. So this is still a very small window, and I think the better way to look at this is that higher gold price has been very well supported on that idea of rate cuts. So when we do see them, we'll see gold price continue to climb. So in the meantime, it looks like we get another shot at some dips. So the strange part of this whole thing is that falling gold prices are a side effect of a surging dollar. And it's strange to think that the dollar is surging because inflation is not under control yet. Logic would tell you it would be the other way around. But we know this situation, don't really need to go over it again, but the 10-year Treasury yield is back up to 4.27%. So it doesn't mean the economy is on a tear, it just means the Treasury yields are. And that's heavy competition for gold. So this flip in sentiment might seem pretty abrupt, but it was a data-dependent case. We've heard that a lot before, and I thought that we would see this happen in September, about the time that the rally actually took off, when we instead got this 3 rate cuts in 2024 story. Well, now that's less certain. We have a few Fed officials publicly calling that into question, and we're back to a case of wait and see. So I'm no analyst, no expert, but nothing has really changed here as far as I'm concerned. We just have a better price for gold purchases while we wait for more concrete action on rate cuts. So I think it's a good time to buy. We've made the guess here already that we would see something like this. We'd see a drop in price leading up to that pivot. Now, I don't think that it should be any big surprise, but there's definitely something about being on the other side of that $2,000 psychological level that could lead to more. So it'll be interesting to see how much of this is a knee-jerk reaction and how much sticks around. So let's call it good there, because I really can't do much more than guess where it goes from here, and you probably have some shopping to do. So let us know what you're up to. Let us know if you're buying the dip, you're waiting for more, whether or not you expected this drop at all. Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.